report later.
Now, the Bank of England is expected to announce later today that it's cutting UK interest rates for the first time in 7 years.
What will this mean to us? What will it mean to businesses? Well, Ben's taking a look at this. He's at a factory in Leicester Forrest this morning. And you're not going to get too tied up there, are you? It's a tape factory.
I see what you did there, Naga. Thanks very much. Morning, guys. Yeah, we're at a tape factory, and we've come down to their warehouse because it's amazing. There's a tendency, isn't there, to think about interest rates as just being good news or bad news for mortgages, but it has a big impact on business too. This is a really international business. I mean, just look around here. This one's off to Denmark. This is going to the Czech Republic. That's going to the Netherlands. That one's going to Kuwait in the Gulf. This one here going to Finland. And it means that they're doing really well, so when they want to expand, if there's a fall in interest rates, it means that they can, frankly, borrow that money a bit more cheaply. So what could it mean, and what will we expect today? Well, let me just show you this, because, well, interest rates, they're currently at 0.5%. They've been at that record low since March of 2009. They were slashed to that rate at the height of the financial crisis. But what we're expecting today is a cut, and it's a cut, well, look, of 0.25%. That's what we're expecting today, and if there is that cut, well, it will take it to 0.25%. That will be the interest rate here in the UK. So what does it mean for business, and what does it mean for consumers? Well, with me, some guests who can probably explain. Mark, you're the boss here. Good morning.
Good morning.
Explain to me what a cut in interest rates would mean for you guys here.
Well, for an exporting manufacturer in this country at the moment, it's very positive news, particularly one like us who wants to grow. It means that the value of the products we're selling has increased, and also the cost of asset finance has reduced. So for a growing UK exporter, it's great news.
Yeah. By asset finance, you mean the ability to be able to borrow money and expand and take on new stuff?
Exactly. So for us, we want to grow the business. That's extremely positive. And also the fact that it keeps the value of the pound low means that those sales we're making overseas are a lot more valuable to us.
OK, Mike, for now, thank you. Paul's with him. Paul, you're from the Midlands Economic Forum. You don't agree that cutting interest rates is necessarily a good thing. It could be counterproductive.
Yeah, I think the impact on the ability of commercial banks to lend and the impact on pension funds could be quite negative. And really, we've exhausted all the monetary levers. We're only talking about a shift of 50 basis points. And really what we should be looking at is the government making some major changes in taxation policy. Otherwise we could be confronted with a major sterling crisis later on today when the New York markets open.
Yeah, one we'll watch closely. But Jasmine, that's the issue, isn't it? It's not good news for everybody, particularly savers who could lose out once again.
Absolutely, and there are more savers than borrowers in this country, particularly those who are retired, who are trying to find ways to live off their savings. They've been hammered for the last 7 years at least, so this would not be good news for them. Fine for borrowers, but yet again, it wouldn't be good news for savers.
What difference does it make to an average mortgage? For someone who's got an average mortgage, a quarter percentage cut in the base rate, does it make a huge amount of difference?
Well, for a lot of people, it can make no difference at all. If you've got a fixed rate, absolutely no difference. The people who are going to benefit immediately are the ones on a tracker, of course. They're the ones who've done extremely well over the last few years. If you're on a standard variable rate, it might help, might not. It might come in a little bit later. But, they're talking about a 0.25% difference. So, a lot of standard variables, they might just go, oh, well, we won't for a while.
Yeah, Paul, just a final thought from you, because there's a suggestion that this is just the first cut in what could be a number of cuts, and we could actually get down to zero. What does zero interest rates mean?
Well, you can't really cut anymore. We have exhausted monetary policy. One of the things the markets will be looking at is the type of if there's going to be any quantitative easing. And last time we had quantitative easing, that cleaned up the bank's balance sheets. What we're really looking for now is whether it's going to be used for regional infrastructure development. And the new government has actually made some very positive indications that they're going to have a comprehensive regional development policy. And if they use quantitative easing to back up that infrastructure planning, that could be really successful.
OK, Jasmine, Paul, Mike, for now, thanks very much. So we're going to stay here and work out what all this means for us. And I've got another roll of tape. So, guys, I don't know if you have any requests with our artistic tape work this morning, but I'll see what I can rustle up for the next hour.
You're asking us what we'd like you to do with the tape?
Yeah, you're not allowed to suggest put it over my mouth, I'm afraid.
OK, I'll have a good think about that, Ben. See you later.
He should be very afraid. It is just after 7:45. You're watching Breakfast from BBC.